Welcome to Trading Basics. What we're going to cover in Trading Basics today is basically what we refer to as the 4 T's of trading. Now, what exactly this is T1 is going to be your tradable instrument, which indexes and markets you should trade and why. Then we're going to go into technical setup, what patterns we are seeing in the markets, triggers, what's actually going to trigger the entry, and then once we're in the trade, what's our analysis to manage the trade. This first video, again, we're going to focus on covering the first T, which is going to be tradable instruments. Okay, so tradable instruments, there are basically 6 that we follow. Just for reasons of getting started, we're just going to focus on these first 2, which is the S&P 500. They're basically the top 500 companies in the world that we're going to be able to use for trading. The S&P is also the most liquid futures contract, so the ES is extremely liquid, meaning we can buy and sell relatively easy, not going to have any issues. And then the NASDAQ 100, which is basically our momentum market, really gives us a feel for how the overall markets are working, but then later we can progress into additional markets, including oil as well as gold. Russell is also a really good instrument to be able to trade. So in discussing tradable instruments, one of the things we want to look at is basically an example of why we would like one particular instrument over another. If you look at the S&P, every single point of the S&P equals $50. So if you take the total number of points, in this case 2 points equals 100, and then you take the number of contracts, being 5 contracts, that would mean a total profit of $500. So 2 times 2 points multiplied by the number of contracts is going to give you your dollar amount. The NASDAQ, it equals $20 a point rather than the 50. Why we like the NASDAQ is, again, because it tends to move more. So 5 points is basically equal to 2 points. So 2 points on the S&P is equal to 5 points on the NASDAQ. So if you take a total of number of points, in this case 5 points equals 100. You take the number of contracts, if you had 5, that would equal the 5 contracts. So again, we want to just go through a brief example here for you of what we look at. And again, starting off with the S&P, which equals $50 per point per contract. In one trade, let's say you made 2 points, which would equal $100. So take the total number of points, 2 points equaling 100, and then take the total number of contracts equals 500. An additional example, let's say that you got a total points of 6 points in one day. 2 points again would equal 100, so the total for that would be 300. And then if we took the total number of contracts, which would equal 15 contracts, you could see how we could make up to $4,500 in one day relative to our trading. So that's just the first T, and again, just want to make sure you guys understand the metrics of what we're doing. The easiest thing to do is always to convert that to points first, realizing that you make $50 per point, figuring out what that total is, and then timesing that by the number of contracts over the course of that trade. So hope that helps you, and thanks for the first T in the discussion.